Yes, good afternoon, everybody. So today's webinar, as you can see, is how to draw support and resistance levels the dynamic way. So in other words, how to draw dynamic support and resistance levels. So if you can remember previously, you actually looked at how to draw support and resistance the horizontal way. You looked at ways through which you can draw support and resistance correctly, horizontal and diagonally. Today is a bit different. We are going to focus on how to draw the same levels but the dynamic way. So what the word dynamic means is it has to be either vertical or horizontal, but not the usual way. So I don't know if that makes sense to anyone, but what I'm trying to say is that anytime that price comes to a level, you have a chart already, and you notice that anytime the price goes to that level, it tends to be held on the other side. Something. So we are going to use an indicator. We'll use two indicators on this one. We have the first one, 52, simple moving average. Then you're also going to use the other one, which is 21, simple. So these are the ones we're going to use to illustrate the concept of dynamic support and resistance levels. What dynamic means is it's not fixed. That is, anytime the price comes, the same level which is being used now may not necessarily be the same level which is being used in the future. Of this, let's look at this from this point. This one. This is called a dynamic support. This point is a dynamic support, that the price goes up and then comes back to the same point but does not do anything. Instead it goes above, comes back to the same place. This is still a dynamic support. This point moves up, comes back to the same place. Have this as a support. This is a very good support. This is a dynamic support. There's also this one as a dynamic support. You also have this as a dynamic support. So what dynamic support means, that it's still a support the same way we draw the previous ones, just that it is not along one straight line. So anytime, from what we said previously, we're actually drawing something like this. We had a level at this point, something is, and we stated that this is a very good resistance. Price went down, it came back to the same point, and it broke above the same point. Then we have this as support. So this is horizontal support. The same place was used as a horizontal resistance before. So have this. So it's a good resistance at this point. It's another resistance. It's another resistance. Price went. Example is this one. Have this as a very good resistance. Price was using it as a sell place. We used it as a very good resistance here. Went down, it came back, we took a sell. This point continued down, it came back to the same place and even went above. So while price has broken above this level, we're actually looking for a buy, but the correct place to buy from is not when price is above at this point. Wait for price to retrace back to the same point, able to pick a buy at this support zone. So this is how to draw them horizontally. This is one way you can draw support and resistance. Have a line, confirm if that line is being used as a resistance. Then in case price goes above it, wait for price to come back for the same level used as support and a buy place. So have this one, this point here. So this one, very good support. Price went below, came back to the same point. So as I mentioned previously, the correct place to sell from normally is not when price comes back to the same place the first time. You wait for price to proceed down after the first retracement, then it comes back to the same place, and you start picking a sell on the second retracement and the subsequent one. So we could not have sold here, but we took a sell at this point. We also took a sell when price went down, but then came back to the same place. We took a sell there. And when it went down the third time, came back, we still took a sell. That sell, it now went up to where. So this is one way to do support and resistance levels. Pick a good support, then you wait for price to break it, and then you now pick the same place as a resistance when price comes back to it. It's another good example here, just somewhere here. Support. So have this. See, previously we had this being used as a support. Price went up, it came back, but couldn't touch that level correctly, then it continued up before this break. So this is just a single way to draw it, and if you confirm, you can find it anywhere, even on lesser time frame, 1 hour. Still have the same concept, still applies. We have this one. What I'm trying to say now is what we looked at previously. I'm just trying to give like whatever we're going to look at today is an extension of what we looked at previously. But I need to start by first mentioning what that previous was. And this is what I'm saying. That we had this. This is how you get a support. Goes up, comes back. There's an attempt break, but then it comes back up. So somehow this is what is known as a false break. So our support is another false break before we eventually see this break. So after the break, the final one, which is this one, the first one, we don't do anything. But if price comes back to the same point for a sell, at this point, we look for a sell, pick a sell at that point, sell at this point. Sometimes you may have a level like this, but then the price does not cross clearly below. That's okay. If you have a level and then the level is just being used as support only, just keep buying from the same level until the day that price buy, but then the price closes below. So don't keep anticipating that this is a level, so price has to break below it for you to sell. Sometimes this could be a very good level and price does not clearly close below. So you observe that properly. Ensure that if this is a good support but price does not break below it, don't find yourself selling the hope that the price is going to break below. Price has to break below the same way it did at this point. You have to go clearly below this level, then there has to be retracement before price goes down. Second retracement down, it's another retracement the upper side. So that's the only case where you find yourself selling. Anytime the price comes back to that level after the first retracement, you do the same thing, you keep selling. And the day that price closes on the opposite side, then that's a reversal. So what we are looking at today is slightly different. We are not focusing on horizontal levels. We've seen now from what I just mentioned that anytime the price approaches a support, it tends to reverses the upper side. Anytime it approaches a support, it tends to reverse the lower to the upper side. Then anytime price approaches a resistance, it reverses to the lower side. So with what I'm saying today is that the same thing applies, the same concept of where when price approaches a resistance, it reverses. The same thing applies, just that it is now applied to like a dynamic level, not a horizontal level. Find a one of this from the entire place from this point here where the price is. We have this. If you see my screen now, I hope you can see I'm currently on 15 minutes chart USD. So this is a simple an exponential moving average. As you can see, we have it drawn from this point up to where the current candle is at the moment. So anytime the price goes below this exponential moving average, that is a break to the lower side. And anytime price tries to get back to the same point but does not clearly close above the same exponential moving average, we actually expect a sell. So this becomes a resistance. Price continues down, comes back to the same place, we have the same resistance. It continues down, comes back to the same place, we have the same resistance, then continue down, same place, comes here. So even this was a resistance, just that the price clearly broke above it. So if I was doing horizontal levels, I would have said that this is a very good resistance. Price has gone above it. I'm waiting for price to retrace back to the same place before I pick a buy. So the same thing applies to this level, dynamic levels. They're not horizontal in nature, but the same concept of price breaking above and retracing towards them is the same. That is, if you have a level like this, a resistance, a resistance, a resistance, then price goes above that particular line. The moment it comes back to the same place, that's a good buy. So technically, we could have bought here the first retracement, then wait for price to continue up, trace back. We could have bought the second time, continues up, retrace back, could have bought again the third time, and even the fourth time. This is still a buy. So that means that time the price comes back to that level, we are looking for a buy. Because I was selling the same way, the same concept which we are using to draw horizontal levels is the same concept I'm using to come up with the, just that in this case I'm adding an indicator. What indicator does, it acts as the level for you. So when the price goes down but it comes back to the same place, that's a sell place. It goes down, comes back to the same place, that's a sell place. The day that price breaks above the same indicator, when price retraces back, we're supposed to buy. So you look at your screen. Second, I'm going to add one chart here, GBP/USD. Move straight to 4. It's happening first. As you can see, this point here, when this happened, we had a very good resistance. At this point, the price went below, it retraced back, went down, retraced back. So these are the correct place to look for a sell from. If you've noticed that on a higher time frame you're actually selling, wait for price to retrace back and bounce off of this indicator, pick a sell. So I would not have sold the first time, it was not a sell, but I could have sold the second one and the subsequent one. So I could not have sold this here, but I took the sell, also took this sell, also took this buy. That's simple. That's a buy. We also have this as a very good buy. So the anytime now the price comes back to the same place but does not clearly break below the indicator which I was using to sell before, actually look for a buy. So this is a whole strategy that somebody can stick to. You can develop your strategy just based on this, on that. Anytime the price breaks below this indicator, we actually wait for price to come back to the same place so that we look for a sell. Some people find it very, very hard to come up with the horizontal level. So if you cannot come up with an horizontal level, you can still create your own using the indicator. Use this indicator. Just come up with a good period. What I mean by period is this one. See, what I mean by period is this. Come up with the correct period for your indicator. It could be any 21, whichever. Just come up with a good period, and then I hope I mentioned how to come up with a webinar. I mentioned how you can come up with your own period. You don't have to use the default, which is 14. So the correct one so far, the ones I recommend you use is use this, use the default one, 14, or use 200. These are at least the best ones. So as I was saying, this first so that you see it. As I was saying, the same way you check for horizontal levels to trade, the same way you're supposed to check for dynamic levels to trade. And dynamic levels, you cannot come up with them without an indicator. You have to at least attach one indicator to your screen. And that mostly is the moving average and other trend indicator. And find them. This one you cannot use, but you can use these Bollinger Bands and also use envelopes. All these indicators you can use to find them. So if I was using the first one, envelopes, this is how it looks, but I'm going to add period to it so that this is how it looks if I add period. That's how it looks. So what this means is anytime the price now comes back to the same place you look for a sell, subsequent on a sell. The moment that price breaks above, the same place should be a support and a buy place. So the same thing still applies. We're not changing anything. The same way I wait for price to break above a resistance to keep buying is the same way I wait for a dynamic resistance to be broken so that I sell from the same place. I'm sorry, I wait for a dynamic resistance to be broken so that I'm buying from the same dynamic level. Like in this case, you have this as a very good sell place. That day that price goes above it, buy. Let's go back to the past. Of this have very good this point here. You can see the price actually went above the two moving averages. From this point it opened below and then it closed above. That's a breakout. So you don't buy just because the price has gone above. Wait for price to retrace back to the same point. This buy at a support. Next one here, this was a buy just that the price attempted to close below before it went back again up. A support at this point. This was a very good support. We also have the next one as a good support. So keep buying until the day that price actually closes above or below the same indicator, big candle. Like in this case, we were buying all through from 4th of January till 1st of February. Actually buying, the price closed below, came back. So instead of selling maybe at this point, wait and sell when price has gone below and just back to the same point. So we could have sold here, basically sold. Also had the chance to sell at this point, chance to buy when this happened. Price gapped above and it came back to the buy, sell. So the same thing applies. The same levels which we were using before is the same levels which we are now using enter trades, but the dynamic way. This so that we're able to use average instead. That's what we. So I hope this makes some sense, that it's just the same way you wait for a level to be broken so that you can pick a sell. Like if this was a support here, assuming I was having this as a very good support, price has been using it previously. From what you see, the price used the same place and the same place was being used previously as a resistance here. But this support, a resistance, price went up, came back to the same place as a support, then it continued up, came back as support, a break below. Anytime, normally, if you are just doing horizontal levels, we were to wait for price to retrace back so that we pick a sell. And that is true even with the indicator I'm having. If you are trading dynamic levels, price has to clearly break below, then retrace back to the same indicator so that you can pick a sell. You don't just sell because price has gone. So if, assuming I didn't have these levels, the ones I'm having on the screen, assuming I didn't have this next one, right place I would be waiting to trade from is actually here when price was touching itself. It was a sell. So when price proceeds down and then it comes back to the same place, still look for a sell. Still a good sell. Proceeds even lower, then it fails to come back to the same place. So I was waiting for a sell here, that didn't happen. Instead, the price continued down. If it comes back, there's still a sell, and the cycle continues. So as you can see, it can, like, somebody can develop just a very good strategy based on only this. For example, this is what you can come up. I'm not saying practice this one. Feel free to practice it if you need it only. Say that this is a level, this as a resistance. Price went above, back to the same support. back to the same support, so break below. So your strategy would go like this, that you look for a level, then wait for price to break below that level, and at the same time while price is breaking below that level, price should also be breaking below the indicator. Then if price retraces back to the same level and touches the indicator at the same time, that's the only sell. That makes sense to you? That you can develop a whole strategy based on this alone, based on the dynamic levels. So you don't want to use alone that anytime the price touches this level, actually pick a sell. Wait for places where this is a dynamic resistance and at the same time this horizontal resistance. That's the best time to. So there are two things supporting you. You have the horizontal level supporting you, and you have the indicator, which is something you can't control, also supporting you. So this is the correct place to sell from. Technically, you could have sold here, but not at this, because there's no level supporting it. There's this, sorry, there's a level. This was still a sell. This was a sell. We have this as a good support. Price went up, it came back. There's a false break back. There's a resistance. So while price is touching this level here, this dynamic resistance, it's also touching horizontal level. That is the correct time to look at a trade. You have two things supporting the sell position. The sell position is seeing. That's always the correct sell. Don't sell only when the indicator is touching, price touching this. Sell when you have the horizontal level supporting the sell. So the dynamic level also supporting the position you're seeing. That's the correct time. Which means if I wanted to sell at this point here, on point against, drawn a line horizontally first, only to realize that this is not a key level. It was used just recently, but it's significant, just that it went again. So I would have sold here, went against, wait for price to come back to the same place, break below, then press back so that I can pick a sell the second time now. So the same place where price I actually lost money, the same place I'm making money from. That is one thing. If you want to trade levels correctly, try and combine them with levels. Anytime you have a dynamic resistance at this point, the same level must be good horizontal level. Like this. This is a very good support which price used previously, broke below it, retraced back. This as a support. Price went, came back as a resistance, back as a resistance, sell place, went down. So if price could have touched this level here, then this was a very good place to look for sell from. You don't want to sell just because this is a dynamic resistance, but you need to sell only when this is a dynamic resistance, and at the same time it's a very good horizontal sell place. Hope that makes some sense. You're not selling just because a level is a dynamic level. You're selling because that level is both a dynamic level and horizontal level. So from this moment you saw the price went down, traced back the first time, attempted to go above, but then it came back down. So have this as a resistance, continue down, same place, a resistance. So before you pick a sell at this point here, don't just sell it. Don't just come and then you find price is somewhere around this point, then you start selling. It's not the correct way. Draw your horizontal levels around that point. Then see if there's a significant level. Like what we are now seeing, this is actually a very good level. You can see previously we had horizontal support, support. Price went below it, it came back first time as a resistance, continue down, back to the same place as a resistance. So before you actually trigger a sell at this point, ensure that the same place is actually a key level horizontally. we are not trading one thing. Don't just trigger sell because this is a dynamic resistance. It will work for you well. But combine horizontal level and the dynamic level. Both of them will give you good results in the long run. So have this on here. Very good level. Price has gone below the indicator and it has retraced back to the same indicator. So you want to pick a sell at this point. Before you come and trigger sell from this button here, ensure you confirm from the past. Check properly. As a resistance, as you can see, we have this. It's a very good resistance. The same place was being used as a resistance. So the moment that we were seeing a sell after breaking below it, that sell was actually genuine. So you go ahead and sell it. But you don't sell because this is just a dynamic resistance or support. Let's check the next example. Have this one. This one here. Very good level. Price went below. So the reason I'm calling this a good level is because it was used previously in the recent past. You can see price stagnating above it. Support here, support, 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 the entire place. Price went below, came back and even touched the indicator. So when price is touching this is a dynamic resistance, you already know that we're supposed to look for a sell. When this is happening, you know you're supposed to look for a sell. But instead of selling immediately, draw your levels just around that point and ensure that the same place you want to sell from is actually a very good horizontal level, and go ahead and pick a sell. So the same place, as you can see, if you sold it here, you actually still had the chance to sell it. You still took that sell there, also took that sell there, then also waited for price to go above it, then it came back. This is still a buy now. So this is one way you can trade the best way. And as you can see, other than the level I'm mentioning, which is this, we also had a level just before that one. Very good support and a buy place. So all this time we took that sell. It's no trade for like one day. The second day is no trade. The third day we find price oscillating around this dynamic support. So this is a buy place. But draw your levels there immediately. Have your levels like that. Like that. Confirm that this is a very good horizontal level, or you can pick a buy at the lowest risk possible. So as you can see, this is confirmed buy. If you bought it here, you're actually successful. If you bought it again at that point, you're successful. But whoever bought it here, there was no money. So this does not mean the fact that it went wrong here does not mean that it's not working. It works well only if you combine it with the horizontal levels. If there's a dynamic support here, the same level around where that dynamic support is must be a very good horizontal support. So you need to draw your line like this. Have a line and confirm that the same place where you are seeing that as a support buy place is actually a support. That's the only way. That's the easiest way you'll be able to get it right, especially if you want to trade dynamic levels. So, instance, there's a clear break above, came back to the same place as a support, went up, came back as support. So the same place, if I was buying at this level around 1.26535, 1.26471, I'm actually still going to buy it in subsequent. So I'm not going to stop buying it at that point just because the price is below the indicator. This is still a very good buy place. Levels are more important than the indicator seeing. So if I was seeing a buy based on this indicator here. Now there is no sign for anything, but the price is showing me a buy. I continue to buy it. Bought it at that point. The lesser time frame, you can see it's much more clearer. Have this as a support, a resistance, the entire place. There's a break above, came back as a support, went up, it came back as a good support. So your job would be simple. If you find that there's a clear buy previously, it's better you start buying from that point. Keep buying from the same place you are buying before. Like this, I would buy, I would sell, I would sell. It's a break, I would buy. If price comes back to the same place, still do buy. So sorry, somebody's asking time frame. So you can use this on any time frame. This is applicable on any time. The concept is applicable on, but the best is when you use it on 4 hours, daily, and even higher time frames. It's better that way if you use it on higher time frame than if you use lesser time frame. So there's this, just a second, let's forget about this. This is just shows the trend. Just a sec. I'll use that for SP500. So you have this, as you can see from this point here, price went up, came back, up, then back to buy place, buy place, buy place. Very good. So anytime the price moves away from this indicator, but then it comes back after some times, buy. It moves away and then comes back, you look at a buy. Moves away, it comes back, you move a buy. And the same thing applies to any time frame. It doesn't have to be daily. It doesn't have to be 1 hour, any time, just any time frame you're comfortable with, whether it's 15 minutes. When the price pulls away from that indicator and then it comes back to the same place, that's a dynamic support. Like have this one. From this point here, the price went up, it came back, a support, a buy, support, a buy, support, a buy, came back, support, a buy. So you continue buying until the day that the price actually closes. So if you have any question, you can still post them. You can still post them to me live. I hope that answers your question. Time frame I'm supposed to use it. You can apply the same principle on any time frame, but better if you can use it on higher time frames. Next one that I'm using. So basically, to use this successfully, if you want to, the correct way to get dynamic levels is to use indicators. You can use moving averages. This is still correct. It doesn't have to use the one I'm using as a custom indicator. You can use indicators like this one, 200 simple move is okay. This is very much okay. So that anytime the price goes below and then it comes back, you look for a sell. It goes down, comes back, you look for a sell. You can use it on any. Other than this, there's another indicator. This envelopes. You can also use envelopes. It's still okay. It's the same principle applies. Anytime price goes away from the indicator itself, when it comes back, you look for a sell. The indicator is this Chimoku Kinko pattern, whichever name. So these are the only 3 indicators I advise for you to find the correct dynamic levels. But either using this simple moving average, the one I'm having, or you are using Chimoku, or you are using envelopes. All of them will give you just the same results. All of them, if you can see, even at this point, give you almost the same results. Whichever the indicator you're using, result is always somehow the same. You can see there's a break below. All of them have gone price up. Like at this point, this happened. This point here, you see that everything was up, but all the indicators you're having are actually above price. All of them at the same time. While if you continue to the future up to this point, all of them are now above and they're proceeding the same. So whichever indicator you choose to use, whether you're using the first one, envelopes, or moving average, give you just the same result, almost the same results. So I hope that answers you also. What's the time frame? frame than the time frame, but the better if you can start using it from the highest time frame possible. I also mentioned the indicators that you're supposed to use for that. That should bring us to the end. That should bring us to the end. Got something today that we are not just using dynamic levels alone. We have to combine dynamic levels to key levels. So you combine dynamic levels to horizontal levels. That's what I mean. So if you have this as support, you have this one as support, a dynamic like indicator you're using showing you a buy here. Just draw a line at the same point. Yeah. Found that the same place is actually a good level. Then proceed to buy it. If there's no such thing, you leave it. Because I've seen cases where the indicator shows you a very good buy, but there's no clear level, there's no sign that this is a good horizontal level. If you buy in such cases, the chances you're going to be stopped out. So thank you very much. You can still forward your questions here. You can still leave them for me under the chat. Under the option for chatting, you can still leave all your questions there. I'll be answering each of them individually. So thank you. See you again tomorrow at the same time.